Welcome to the Properties to Profit podcast. I'm Michael, your host. Excited to share with you my journey from a six-figure job to building a successful real estate business. Each episode will explore various aspects of real estate investing, from wholesaling and flipping to managing rentals. I'll share the lessons and insights I've gained, aiming to help you avoid mistakes and achieve your financial goals. Expect guest experts, valuable tips, and practical advice to guide you on your own real estate journey. Thank you for tuning in. If you find any value in this podcast, please subscribe, share, and follow me on social media. Let's turn properties into profits together. Hey guys, Michael here with Properties to Profits. And today we're going to talk about November MLS data for our entire MLS in the Columbus and surrounding areas. So lots of insight to go around. And you're probably hearing that real estate is, the market's dead. There's no deals to be found. Rates aren't coming down. Prices are about to crash. Foreclosures are up. Maybe all those things are true, but I think you'll find that there's an opportunity here. Buyers can find leverage, right? We can negotiate a little bit. That hasn't happened in years, and it's tricked up over the last couple months. It's investors can buy smarter because there's more opportunities. Sellers can price correctly. If they don't, their house just sits. Operators are going to win if they can figure these things out. You can win when you're an operator. You don't win in real estate if you're just a spectator. No one wins when they sit on the sidelines doing nothing. So what's actually happening in this market? Let's talk data. Median sales prices year over year are up 3.2% in the Columbus market, $325,000. Year to date median price is $328,000. That's up 2.7%. Average sales price year over year is up 4.5%. Things are growing. It's not a price crash. It's just slower appreciation than what we're used to. But inventory is up. That's where people are getting scared. Year over year, inventory is up 20%. We're at 2.2 months supply. Highest it's been dating back to 2018. And so what we're finding is homes are just taking longer to sell. They're not moving as quick as what they once were. And a lot of people are getting nervous. Days on market increased 31 to 40 days. So that's a 29% increase. We've seen this increase for over 5 months. Days on market just keeps going up, which means if you're pricing it wrong, you're sitting on even longer. If you price right, you'll sell. Just know it's going to be 40-ish days on average, not in a week like we're used to seeing in COVID. Sales volume is stable. It's up 2%. We're actually going to close the year up 2.9%. Last year was a really slow year, but we'd like to see more than 2.9% increase. Transactions are stalling out. There aren't as many transactions closing. It's some 30% of the MLS doesn't close. Why is that? Well, it's just bad deals. Sellers' expectations are off compared to what buyers can pay. Maybe it's a realtor, maybe it's a seller. I don't know. This market's just normalizing. What you saw in 2020 to 2022 was just cheap money that has never been seen before. So everyone bought a house. Now, 23 and 24, there was some shock and hesitation, and we're getting back to normalization. I think this is the market that's here to stay. Rates aren't down. They're down 0.25%. It's dating back to last year. Not a significant change, even though the Feds have significantly dropped rates, 0.75 point. We really haven't seen that in mortgages just yet. We'll see if that changes in 2026. So this is where you'll win if you know how to level up your skills. You can underwrite correctly. You can have good conversations with sellers if you're buying deals off market. If you're a buyer or an investor, you need to stop waiting for the market to crash. It's most likely not going to happen, especially as rates continue to come down. Underwrite conservatively, negotiate harder because those days on market can really hurt you if you're flipping. And look for those stale listings. Those might be some good opportunities. Flipping is going to be a little tough in this market. If you're good, you can provide a better product, you'll still do okay. If you can find ways to buy assets and hold them, I'm guessing you'll see the bottom locked in relatively soon. When that happens, we all know what happens next. Appreciation starts to pick up. Not overnight, maybe not in 1 to 2, 3 years, but years 4, 5, and 6, I bet you'll be glad you bought that real estate now. Remember, if you're a seller, overpricing will hurt you significantly. The first 14 days matter more than ever. You want to see people coming in. Convenience is super important. And if you're an employer right now, October ended up having the most layoffs we've seen in over 18 years, dating back to 2008. What that means is there's more employees looking for jobs. On the flip side, if you're looking for a job, you got to show up, bring the energy, and bring your best version every single time. You may not get a call back because us owners have more opportunities than we haven't had in a long time. Remember, skill's better than luck. It takes practice, takes work, and a lot of us won't put the work in to gain that skill that matters in this market. This is where we thrive. We do daily training. If you're not doing daily training with your team, you probably should. Now's the chance. So what happens when you do all this right? Well, fewer emotional decisions. You get better margins, less competition. You can build stronger margins. Better portfolios will happen in 25 and 26. Why? Because there's less competition and there's more opportunity. More people need to sell now more than we've seen in a long time. All of this works because the data's sharing that. Our local market's still been strong. Days on market's sure going up. Inventory sure is going up. But we got to be disciplined. Now's the time to buy. It doesn't seem like things are dropping off. Things were dropping off. Prices would be going down. And days on market would be skyrocketing. These are real statistics. Real estate doesn't break. It's the money behind it that break. And as long as people still have money or institutions still have money and there's jobs coming to where you live, real estate's probably going to be fine. We're probably going to start to see things start to pick up a little bit. Maybe not as fast as what we want, but just keep going. That's when we'll win. Is when everyone else is giving up because it's slow. It's not a quick get-rich scheme anymore. Get-rich-quick scheme anymore. That's where you can win. Just keep going. Keep doing the disciplined work, and it will all pay off in the long run. Thanks for checking in, guys, and hope you have a great day. Thank you for listening to the Properties for Profit podcast. I hope you found today's episode valuable. If you enjoy the show, please subscribe and share it with others who might benefit. Follow me on social media for more updates and tips. Until next time, keep turning properties into profits.